Do I think Bitcoin's going to $1 million in 90 days? No, I do not. Do I think Bitcoin could go to $1 million in this cycle? Absolutely. And this cycle would be the next 2 to 3 years, for sure.
It is the third week of March. This is the MetaMentors week. And as always, we've got a ton to discuss. We're going to run right through these, but if you don't have the full amount of time to spend with us, check the links below. You can jump around, subscribe, comment, let us know. Today's lineup: Bitcoin and the banking collapse, Lynx DAO, the iconic DAO that is buying golf courses in Scotland, bought their first. Steph Curry has joined. Ron Desantis wages war on CBDCs. Helium joins Solana blockchain. And last but definitely not least, Air Force Ones have their own NFT and you get your own pair, and it's happening in 1 month. Bitcoin has gone on an absolute tear over the last week with hyperinflation, and who better to break it down than Arthur Hayes himself. We got a very long video clip here that I'm going to break down into small segments, and it's awesome. So let's get into it.
All these things that the average person needs that the government can't print. And if they're just going to not allocate the losses for all this debt, which is essentially debt is, I'm going to take the future and I'm going to spend it today, right? So we spent the future. There's no more future, right? We have to pay for it. And so if you have money inside of the system, you will pay for it. And it's an implicit tax on anyone who saves in things that don't go up as fast as the amount of money printed. And so that's the game. It creates a financial speculator out of everyone, even if you don't think.
Bankless Nation, we got Arthur Hayes on the podcast because it is one of those times where there is a bunch of chaos in the macro.
Bitcoin, the times are changing. Bitcoin ain't about getting rich. It's about holding on to actual value. We are in a war with craziness going on, and this video is going to break it down. But here's some of the highlights. We're going to talk about how COVID destroyed so much of the infrastructure that we already had within banking that was already turbulent. We're going to talk about the bank term funding program that was just put out. And then we're also going to talk about the Fed $4 trillion in quantitative easing. How do we protect ourselves from this? And last but not least, $1 million Bitcoin and how it gets there. Sounds in depth. Arthur Hayes is going to break it down. Here's the next video.
And COVID-19 happened, and specter of lockdowns in America, and the financial conditions started to tighten. Everybody was worried about all these different companies going out of business. The corporate credit market froze. And, there's just basically a tailspin, and the S&P 10-year treasury touched a low, intraday low, I think 33 basis points. And then the Fed responded with an immediate emergency meeting, and they said, essentially, we're going to nationalize the entire U.S. corporate bond market by guaranteeing BBB and above. You can sell it to us. And we're going to provide infinite liquidity to make sure that financial conditions can stomach this pandemic.
So we all know that there was already a lot of inflation pumped high over the last couple of years, especially because of COVID. So the bank has been pumping money in. We were already in a tough position, and now there's all this extra money in the system that they've got to start withdrawing. So what do?
You go the other direction. And then, Jerome Powell raised rates the fastest of any Fed chairman in modern day history. And now we are where we are today. The consequence of super easy monetary policy on one direction, tight monetary policy in the other direction really, really quick. And now we essentially bankrupted the entire US banking system.
So the punchline that I think really we need to get to is this thing called the BTFP, the Bank Term Funding Program. And thank you for walking us through what was the setup to this. But I want to really just drive the setup home. And so a bunch of money gets printed in this crazy bull market that happened both inside and outside of crypto. And as a result of that, a bunch of new money gets deposited into a bunch of new banks. And this kind of sets up a lot of these commercial banks, the commercial banking sector, into kind of a trap because once the Fed raised all the interest rates, all of a sudden the paradigm shifts. Can you walk us through that last bit of context to set us up for the funding program?
Sure. So obviously, post the global financial crisis, essentially the U.S. banking system is bifurcated into the super large, too big to fail. They call them globally systemic important banks like the J.P. Morgan, the Citis, Wells Fargo's, Bank of America, those type of banks. And then you have everybody else, right? And there's a lot of new regulations passed on how to do banking in the U.S. and around the world. That's Dodd-Frank in the U.S. and Basel III internationally. And basically what it meant was only the really large players could really make money because it's just so expensive to be a bank.
So what is this bank term funding program, BTFP? Okay, so this BTFP program is a brand new program implemented right as these two large banks failed, these SVP and Signature Bank. They implement this program. It's only for a year. They pump $300 billion into the market, which they had just withdrawn over the last year and some. So they put this money back in. It's under different terms, but they're pumping money back into the system. So where does that lead us?
And so from 2008, the banking sector probably loses their appetite for credit risk. I think that's one of the important pieces of setup here. And so what you're saying is they go into the most solvent entity that exists, which is the Fed, because they can print money. But in order to have any sort of margin whatsoever, they have to buy the longest term bonds because we were existing of zero interest rates for so long. That was the equilibrium that has been established almost completely since 2008. And so that's the setup for like what I'm modeling out as like the Fed rug pull, because they inject a bunch of liquidity and then they jack up interest rates faster than they've ever jacked them up before. And so Arthur, what does this do to the banking sector? And like, this is the setup for this current crisis that we're inside of, correct?
Yeah, absolutely. So the banking sector has all of these U.S. government bonds, long-dated bonds, and then the Fed goes, okay, us and the fiscal politicians have created all this inflation. We need to rein this in, and so we're going to raise rates really, really fast. And
All right, so the Fed rug pull, perfect description, I think, for what the Federal Reserve and all this inflation is causing. But what does this all actually mean, and how does this make Bitcoin go to $1 million? Here's a little bit better detail from Arthur.
Term funding program is implicitly printing $4.4 trillion. And that is just what I'm understanding to be the delta between the actual value of these underwater treasuries and what they will be valued at their full term loans. Is that delta?
No, so I'm basically saying the amount of U.S. treasuries and mortgage-backed securities held on U.S. banking system balance sheets in aggregate is 4.4 trillion. And that's been guaranteed. Right. So if you want to go and tender those to the Fed, you can get $4.4 trillion. Now it's up to you or your depositor what you do with that money, but essentially the entire deposit base, $4.4 trillion can be exchanged for cash using these securities. That is quantitative easing by definition.
Right.
What you do with that cash determines how financial markets,
Sure.
Right. And so then the next question is, okay, 4.4 trillion is about 300 billion more than what happened during COVID in terms of the rise in the Fed balance sheet. That still doesn't get us to $1 million, even if we extrapolate on a one-for-one basis. How do we get to $1 million Bitcoin? Well,
so $4.4 trillion of guaranteed funds that are held in U.S. treasuries and mortgage-backed securities, guaranteed by the Federal Reserve to these banks. So basically, that's their bailout. That's where this $300 billion for just these couple banks came from. They're insuring the depositors based on U.S. treasuries and mortgage-backed securities. That's the BTFP program. Program that's supposed to end in a year, but it will not. Now the banks are propped up by it. And so what does that mean for some of these other smaller banks and also some of these larger banks that are in these same risky areas because of all the inflation? How do the banks protect themselves, and how do we get to $1 million Bitcoin? Because that's what we really want to know.
Of buying the debt that we have to issue. Well, we guarantee that if they ever get into problems, we just give them back dollars that we printed. And from a technical standpoint, the Federal Reserve, from an optics perspective, is not cashing the checks of the government, which in classical economists says hyperinflation, we need to sell bonds. It's the banking system buying the bonds of the US government because they're guaranteed to get money whenever they need it from the Fed. And if the Fed reduces interest rates to a low enough rate where the curve goes positive again, long-term rates greater than short-term rates, it's to have deposit base, buy every single issuance that they can of US government debt. And if they ever need to give their depositors back money, they give the debt to the Fed gives them dollars, right? And so we go this little merry-go-round, and the US government gets to stuff bonds down the throats of the banks, and everybody's happy. And that's what I think the real end game is. And that's how you get to Bitcoin 1 million, because that is yield curve control.
All right. So $1 million Bitcoin. This isn't just a made up fun number. He's actually backing it up with figures based on the amount of dollars that are being printed and these programs that the government is starting to implement to prop everything up because of hyperinflation. Who's the losers here? I mean, if Bitcoin's going to $1 million, you just buy Bitcoin and we're all good to go, right? Well, there's going to be some people that miss out on that opportunity. And what does that look like?
Why that one, not this one?
Right. So Arthur, who loses here? Because I think, rosy, optimistic picture, oddly, because like eventually you're saying that everyone's getting all their money. Banks are going to be able to take free risk. Bitcoin's going to $1 million in 2 to 3 years. Who takes the L?
The L is anyone who holds, dollars, right? Inside of the system, right? So if Bitcoin's.
So if you're holding US dollars playing within this current game that we're playing with hyperinflation, you're going to be a loser. And we're just showing short clips here. This video, I cannot recommend watching, even if you don't have a lot of experience, which I don't, in economics and the background of how the US or how the dollar works. Arthur does a really good job of explaining a lot of F-bombs, so prepare yourself, but watch this whole video. He backs it up on how Bitcoin is going to get to $1 million.
All right. And one of the projects I know that we talked about shortly after it started last year, I know we brought it up in one of our news segments called Links DAO, where you're able to buy into this decentralized autonomous organization that its goal was to start buying golf courses around the world. And your NFT that you owned would allow you to get a membership at that golf course or to play at that golf course. They've made their first major purchase. They bought, let me see what the name of it. It's called Spey Bay Golf Course. It's over 100 years old. It's located between Aberdeen and Inverness in Scotland. It's a very historical, iconic old golf course. They've officially bought it for around $900,000. So the Links DAO now officially has real estate in their portfolio. And by owning one of the Links DAO NFTs, you or whoever has one is able, well, not quite yet, but eventually we'll be able to play at this golf course, which is pretty awesome. I know when we
The world practicality.
Yeah, exactly. And that was kind of the main point when we talked about it last year. It was like, oh man, this is kind of the real world use for NFTs. This was when just the JPEG NFTs were real big, and we were talking about needing one that had some real world usage. And this is it. I mean, you're basically buying a membership in the form of an NFT, and now they're doing their part by actually going around purchasing up real good golf courses. I think they took a vote and 88% of the members voted on buying this golf course. So that was a very overall positive amount of the members did want to see this happen. So they are now under contract and they will be doing their due diligence and getting it all taken care of. But it looks like it's going to go through. So for around $1 million, they just bought this iconic Scottish golf course.
Man, that's awesome. That seems like it's going to be interesting to see what this DAO, this NFT continues to do. This is a bear market and they're getting stuff done. Awesome.
Well, yeah. And along with the purchasing that golf course, they got a little, another bump in interest because Steph Curry bought a membership NFT. So Steph Curry, they tweeted out not that long ago, welcome to the family, Steph Curry. And he's apparently a pretty big NFT guy. Did you know that? I think we may have heard his name pop up a few times. He's got quite a bit of stuff, including Bored Ape Yacht Club and stuff like that. But he's also a huge golf fan, a big golf player. When he's not playing basketball, he's playing golf. And so he purchased both the leisure membership and the Links DAO global membership. Those NFTs run for about 0.29 ETH for the first one and 1.12 ETH for the second one. So not only him buying one, but the fact that he's got some celebrity status, that helped push more interest and raise the floor price of a lot of these NFTs that they're selling. So, all right, and I've got the tweet here from the Lynx Golf Club. They tweeted out, Steph Curry, 30, see you on the first tee. One of the things we like about that is everybody who knows what's going on, that's huge. That's a little bit of a reinforcement for the idea, hey, this is going to work. And two, everybody who follows Steph Curry on Twitter who doesn't know what that is, they're like, oh, I need to check this out. And when they find out it's a Web3 based, a DAO, that's a lot of people that aren't looking at Web3 that go, oh my gosh, Steph Curry bought into this membership. I could buy into this membership and maybe see Steph Curry playing on the golf course, or something like that. So it's always good to get any big names, wrapped up with a project like this, especially one that seems to be doing so good. They've got their golf course, they've got their celebrities. I think it's doing exactly what they planned on doing. So hopefully they keep up the good work.
Yeah.
All right, now for some less exciting news. Florida Governor Ron Desantis proposes a law to ban CBDCs. Now, Ryan and I have talked about these. There are some benefits to CBDCs, and I don't know how Ryan feels, but I feel like mostly it's way too restrictive and having the government control all forms of money. I'm not a huge fan of it, and apparently neither is Ron DeSantis. He's already started a law to ban CBDCs in Florida, and this is even before the federal level has issued CBDs. So he's getting ahead of the game. He's not going to let it happen. If you're not familiar with CBDCs, it's a central bank digital currency. The benefits are, if they issue money, say like during coronavirus, when everybody gets a little bit of extra money, what they call those, a stimulus check to kind of help out with your daily bills. A CBDC has the ability to go, okay, well, here you can use this at a grocery store, at a gas station, at a hospital, stuff like that. Where you can't use it is a tattoo parlor, a comic book store, you know what I mean? Stuff like that. Right. So it actually has the ability to limit where you would spend your money. And for some cases, like when a government gives you a stimulus check to help you buy groceries, that's a good cause. But that starts to lend into more restrictive stuff. If you're on, public health assistance, anything like that, they can say, well, you can't go to McDonald's, or you can't buy cheeseburgers, or you can't buy junk food, or, they're able to tell you what you can and cannot buy because it's basically their money. And to have a centralized currency, they can make those rules. And that obviously is very limiting.
It's more control. The ease of use is attractive, but it's why we like digital currencies anyways, preferably ones that are not centralized, which CBDC would. They're going to have control because the US government will have control of how it's processed, paid, and everything else, where Bitcoin is decentralized like a lot of other cryptos.
Not only that, but it's the exact opposite of cash. Cash is anonymous. You can spend it. You can do whatever you want. But they could start making a blockchain log of everything that you've ever purchased with a CBDC. And that paints the picture of exactly who you are and where you go and what you shop on.
My wife's not going to see that list, right? US government, I'm okay with that.
That's the thing is, once they start, collecting data like that on a nonstop basis with that currency, You don't get to control what happens to it after that. That's their information. So
yeah, and this is already happening, like over in China. There's instances that with their digital currency that they've already implemented, and the tracking that. So if this interests you or scares you, research some of that, and you can see.
yep. And you know, in addition to privacy concerns, Desantis said a federal CBDC would also diminish the role of local community banks and credit unions. So he was just putting a stop to it right off the bat. So, like I said, they haven't even issued one yet, but he's proposing a law in Florida to ban them there. So keep on fighting the good fight, Ron.
Man, yeah, he is. Yes, he is. All right, with all the chaos going on with the banking system, the Bitcoin pump, all the distractions, there's all these other smaller projects, and small is not the right word. There's big things happening that's going unnoticed because of all the other attention with what's going on in the market and Bitcoin. One of them is Helium is migrating over to Solana network. Two major crypto companies doing huge things. They're combining, and there's a lot of people that believe if this migration goes through like it's supposed to on April 18th, this is going to send Solana through the roof and bring Helium right with them. So what is Helium, you ask? So, they are using the decentralized system to implement hotspots, of which they're at right around 1 million of them now, to improve, basically bring the internet and all its decentralized capabilities that we're going into with Web3 to poor areas, rich areas, and everywhere in between. So Helium aims to prepare the Internet of Things communication for the future, identifying inadequacies in current infrastructure. Helium, which their token is HNT, is a decentralized blockchain powered network for the Internet of Things, which is also IoT. Helium mainnet allows low-powered wireless devices to communicate with each other and send data across its network. So this has been long awaited. It completely makes sense, this migration that they're doing, and should free up Helium to do even bigger and better things than they've already done. I know some people that are already using Helium as their internet provider. For those of you who are new to crypto and Web3, you may not know what Solana is. It's been a roller coaster. We've covered Solana because there's been a lot of action there. But Solana is a public open source blockchain that allows for smart contracts, non-fungible tokens, NFTs, and various decentralized applications, dApps. Solana, prior to being associated with FTX and its collapse last year, was considered many were calling it the Ethereum killer. Many believe that's still going to be the case, and there's a lot of evidence for that. Solana is a sleeper for sure, and me and Ben both are on accumulating Solana tokens. So what does this mean for the actual Helium and Solana networks? The move means that the Helium community will no longer have to divide its focus between maintaining the Helium Layer 1 blockchain and expanding Helium's decentralized network. So essentially what's happening is Helium is moving over to Solana so that they don't have to worry about the blockchain part of it that they're running on. They can just focus on innovation, pushing out their hotspots and their products, and basically growing their inventory of assets and quality functions that users can actually use.
All right. And similar to what we were talking about when we were talking about the Links DAO, how it takes digital assets and brings them into real world usability and collectability, Nike Air Force Ones is releasing, or has released, a whole collection of these random NFTs of their Air Force One shoe. They're already out and minted right now. You can buy them on the secondary market like OpenSea. And what these are is, it's just, you can see here on the screen, it's just a collection of these random Air Force One shoes that if you own the actual NFT next month during the forging event between April 24th and May 8th, you will be able to get one of the limited edition real world shoes, not the digital asset, but the actual goes on your foot shoe. So a forging event, when they're doing this, holders of the eligible digital collectibles will be able to redeem it for a limited made to order physical product. And it's only lasting from April 24th to May 8th. So you have to buy your NFT before then. After that, your NFT will be linked with the actual physical shoe. There will be a chip in the shoe, and you'll be able to sell the NFT with the shoe to actually prove ownership. So this, we've had a couple of projects talk about this, especially with like Rolexes or artwork or very expensive but limited pieces of a collection. This is the best way to prove ownership, is if you sell, you don't sell one without the other. You will sell them together. So when you sell somebody the NFT and the shoe, then now it shows that that person owns the shoe. And if it were to get stolen, if it were to get lost, they have actual digital proof of ownership, which is a big step. And right now it's still almost kind of a novelty, the way that they're doing it. It's not really, I don't know how it would work out in a court of law, but this is definitely the direction we're going.
Yeah, it's on the blockchain. That's the genius of the blockchain, is it's verifiable and it's guaranteed, for a lack of better words. Like it is there, which is why you're seeing it, NFTs attached to real estate and all these other things, because it's as legit as you can get.
Yeah, because say I bought something and I kept the receipt, and then I sold it to Ryan for $1,000 cash, and then I went to the cops and said, "Hey, I got the receipt. Ryan stole those from me, and he never gave me any money for them. He just took them." Then there's no other proof other than who has the receipt that who owns them. And so it's getting to the point now to where, especially with forgeries, fakes, frauds, and dishonest merchants, you're going to want an NFT, especially of a high dollar limited edition item. And it's pretty cool. Something like the Air Force One is so iconic and it's been around for forever that it's a great way to do it. Plus the NFT will be really cool. And some of these designs are pretty sharp. So
yeah, they are. Yeah. Another, major brand bringing it to real life, attaching what we know as the real world and Web3, blockchain, crypto. Very cool.
Yep. And that's what I've got. That's a couple of good stories today about bringing Web3 assets into the real world. Some good information on Bitcoin. Yeah, I like it. It's been a good week. We'll have even more stuff next week. Ryan and I were talking. We're going to have to schedule a whole sit down because there's so much going on in the Web3 space right now, with prices moving. There's a lot of activity starting to get churning again. So next week should be a very exciting show.
Oh, before we go, you better give us where's Bitcoin and Ethereum at? Our weekly update.
That's a good point, Ryan, because Bitcoin just recently went over $28,000 for the first time in like 9 months. It's since retraced. You can see it's here about 27,400. So still doing really good right now. But yeah, it was just over 28,000 yesterday. Ethereum's at 1,750. BNB 323. Let's see, Cardano. Got a lot of Cardano. That's at 36. Doge is still at 7 cents. I'm excited to see if this time during the bull run, if Doge takes off again, or if its moment is is over. You know what I mean?
If it was just a novelty because it was early into the game,
right?
First meme coin.
It'll be interesting. Solana is over $20 at 21.56. And let's see, we got any other good ones? Cosmos, I have those. That's yield bearing, 11.53. That's a good one. We'll call that good.
Okay.
Well, yep. So Bitcoin 27.5. Expect big things next week if we're going to be at 1 million in a couple of months.
Yeah. Good episode.